Welcome back, traders, to StatOasis channel. This is part 3 of the portfolio series. We're doing a seasonal portfolio, trading the S&P 500 stocks. Not all of them, but we picked all the stocks from that universe. In this part, I will show you how this portfolio behaves in each market regime. And what can we find out? What more information can we find out through this analysis? And we can use that later on to position sizing or to turn the strategy off or on anytime we like. So let's dive in. Welcome back, traders, to StatOasis channel. My name is Ali Casey. Today we will continue the video about seasonal portfolio, and we will dissect the amount of trades we have into different views to extract some more data that can benefit us in trading. If you remember, in part 1 and part 2, we gathered the data and we found the optimal place to put the stop loss, and if we want to tune it per pattern or per stock. And now we're going to continue the video to dissect the data in different views. Okay, so we figure out the some markets, some patterns to take off, and the stop loss, and now the fun starts. Remember, we have the SPX, the S&P 500 raw data, and we pulled that with the market regimes. Okay, so now we can do some more analysis. Let's pick the win-loss again, and the P&L, and this time we want to see what happens when the close of the S&P 500 is above its 100-day simple moving average. And we can see that it's almost the same. I mean, we make more money when the S&P 500 close above the 100-day moving average, and we take our seasonal trades, we make more money. It's almost double. This one makes $6,000 per share, and this one is $12,000 per share. And if I remove this, you can see them in total. So with the losses, this one is about 5,000 and this one is about 11,000. Okay, good. But I mean, I cannot use it. Like, I cannot say, okay, I'm not going to trade when the S&P is below, because still I'm making lots of money per share. This is $5,000 per share. So what happens if I choose the 200-day moving average? So take this out, put this in. Again, same story, but this time I make 3 times more. So this is about 4,400, and this one 11,000. So it's almost 3 times more you make money with this one. So this is even a little bit better. Like, if you want to use a filter, then I will use 200. And what if I want to check when the volatility is rising? And this I represented by the 5-day moving average greater than the 20-day moving average of the ATR, average true range. So if I put it in, and we can see when the volatility rising, I make less money. But again, it's too much money. So 7,400 compared to 8,400. So I cannot use that filter also. So it's good. I'm learning some things, which is I'm learning that when the volatility rise, I don't make as much money. And when the close of the S&P 500 is above the 200-day moving average, also I don't make as much money. But I cannot use them as filter, but probably I can use them in position sizing. So if I'm trading 100 shares, then when the volatility is rising, I might decrease my position sizing to half. Or I might trading 100 shares, and when the S&P closes above the 200-day moving average, then I might trade 200 instead of 100 shares. So you see, it's good to know, but I cannot use them. But remember what I showed you, which was these guys. So now let's do that one. So let's take the 5 ATR, and I'll start with regime. And here you can see now something really nice gonna show up. So clearly I can see that I make a lot more money in these regimes than these. So this is a strong bear and this is strong. And remember, the nice thing about this methodology is you cannot play with it. There is no optimization. This methodology is fixed for any instrument. It will give you what regime you are in, regardless of the instrument you are trading, and you cannot optimize it. That's it, it's fixed. So now we know that in strong bull and strong bear, I don't make as much money, especially in strong bear, but I make a lot more money in bull market. And by the way, bear market, then sideways. Okay, what about my volatility? Again, it's very clear that I make more money, a lot more money in normal market and quiet markets than very volatile and volatile market. And remember, you don't have to be this granular. You can combine these and these. And if you combine them, obviously it will be huge. And now something also beautiful you can do is you can combine these. So now, okay, I can clearly see that this is $1,000 per share. Remember we're taking the sum of PL in dollars, which is cents, dollars and cents per share. So I can clearly see 1, 2, 3, 4, 5, 6, 7. 7 markets are clearly making a lot more money than the rest. 7 regimes out of the 20. It makes a lot more sense than to trade only these regimes than the rest, even though these guys makes money. But over the last 15 years, my data shows that these guys makes much more sense to trade. Also, and this is very advanced topic, and I actually giving you a lot here, so you should really listen. Even if you want to trade all markets, your position sizing should be double or triple here than here. In strong bear, let's say you're trading 100 shares. Well, in sideways, you should trade, this is normal. So normal volatility, strong bear regime, you should trade 100 shares. Normal volatility and sideways regime, then you should trade 300 shares. And of course, you can program that. That will make huge difference. And we're going to go through it hopefully in a future video. But this is really a huge insight for you to see how to trade strategies, because not all strategies are good in every single market regime. That's what nobody teaches you except me publicly doing it now. Of course, some people do, I guess, teach it, but I actually never saw anybody teaches this, which is you have to build a strategy for certain market. Now, you cannot do that on purpose, but once you build it, then you can see where it performs best. And it doesn't matter if it's one strategy or a portfolio. In this case, we have a portfolio. My portfolio performed best in these market regime. Remember, this is 15 years worth of data. So then let's take this one. So quiet, volatility, and bull. So I'll come back here and let me put it now in columns. And let me put my patterns here. Or let's put years first. So let me just check that I'm doing the same in all years. What I want to check is the quiet and bull. So this is quiet and this is bull. And am I making money in all years? So there is no outlier. So you can see this is the quiet market regime. Quiet volatility and bull market regime. And of course, it's not available in 2007, 2008. This is not by mistake. I'll show you this again. So you can see the S&P 500 spend. I want to grab your attention for 1 second. Please hit the like button. Google algos like it, so you might as well. Spend 18% in strong bull, 24% in bull. So combine these two, that's 42%. So 42% in bull market and 33% in bear market, and the rest sideways. And then it spent only 1% very volatile, 20% volatile, and you combine these two, it's 21% volatile, and let's say the rest is 78% quiet. But you can see that we don't have any days in strong bull and very volatile, and very few in sideways and very volatile. Also very few in bear and very volatile. Hence, this data is not available here because this market is not available. Now, there are no outliers here. I can see that 200, 48, 150, 30. So I don't have like 1,050. So that's good. That means this thing is working over the last 15 years. I should take this advice into consideration. And then you can check all of them for outliers. And I did check, and mostly none of them have outliers. So I can, I can securely use this, knowing that I'm doing the right thing. I should trade only these markets, and it doesn't matter if you flip them. So now this is the market regime and the volatility. And remember, 1, 2, 3, 4, 5, 6, 7, and they are the same market if I flip them 1, 2, 3, 4, 5, 6, 7. Because it's the same data, I mean. But this is much better than, I mean, you can see the volatility. I can easily tell that, look, this one doesn't make money as this one. And it's better than using the my ATR, which is basically, it's either on or off. There is no details inside it. And same for the market regime, above the moving average or below. It's like 0 and 1. You cannot get granular details about it. Oh, let me show you something else. So let's put the months here. And you can see also month of May, I don't do as good. So this is also good. Now, this again, it's in my portfolio. Whatever strategies I picked in my portfolio, in the month of May, they don't perform well. So my portfolio should not trade in May, or again, using it in position sizing. And it does very well in March. Now, of course, this could be due to the number of trades. So if I do a number of trades, so yes, I do have less trades in May, and that's why I make less money. So May is only low because I don't have as many win-loss. And you can see this pivot table is amazing because you can just throw in anything here and it will just spit out the data easily. I can also, I didn't show you this, you can easily filter these. So let's filter, let's do April. It looks like, let's do March is good, and October, November. Let's do these. And now, what happened to March? So March, October, November. And this also will be filtered here. To program this will take you ages, assuming you know how to program. Like to do this in TradeStation or SQX or any other platform, it doesn't make any sense. Pivot table will take, look at this. This is, we know it's 7,700 rows and something. And then columns is up to AJ. So to program anything here, it's a nightmare. While pivot table make it very easy for you. So I want you to get into pivot table. Just Google anything on YouTube on pivot table, and you can learn a little bit. And then you can just watch this video how to dissect your data, any data you're gonna have. Of course, I can, because I have so many columns, I can also filter by day. And we can go again. This is the day of the month. And I can see that the 8th make a lot more money, and the 20th. So the 20th has more trades, but look at this. The 8th has roughly same as the 4th, the number of trades. 244 trades, and here is 235 trades. But look at how much money I made on the 8th other than this. And same goes here. Made a lot more money on the 29th. Also, you can filter on day of the week. Let me take this off. And we can see same number of trades here, but a lot more money on Sunday and Monday than the rest. These data are shifted by 1 day. It's because some calculations I needed here, so I needed to do 1 day. So this is actually Monday and Tuesday. And also Thursday and Friday looks very good. So remember, we're trying to trim our portfolio. Our portfolio has too many trades in it, 7,000 and something, 535 patterns per year. That means 535 trades per year, which is a lot. But we don't want to trim it randomly. We want to do it scientifically, statistically. So first we decided on the stop loss. Then we decided on how much each pattern makes, because some of them, like we know it's 2% or more, but because the stock price is low, it doesn't make as much. So I know it's a lot to take in. Hopefully you got some use out of this. Pivot tables is a reliable tool, and free. I say free because it's available also on Google Sheets, and Google Sheet is free. But it's really, you should learn how to use it, as it will benefit you a lot. And this sheet, you will get it in my master class, so no need to worry about it, on how to program and everything. And in the next video, we will go about position sizing and how we're going to trade the trades that overlap with each other. How we're going to pick which one to go with. So this portfolio is slowly becoming really good, and hopefully it become excellent to trade for this year. So in the meantime, I'll appreciate it a lot if you do hit the like button, because Google algos like that and they will push it to other traders. Also, if you want to be notified about future videos, then just subscribe to the channel. Great, you made it to the end of the video. I hope you like the content. If you do, please do share, like, comment, and send any questions my way, and I'll be happy to answer them. And until the next video, stay safe, and I'll see you soon.